Go beyond market headlines to understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
The Hang Seng still below the flat line, as is the Taiwanese index.
The culprit, as you pointed out, is food CPI at minus 5.01.
GIFT Nifty tells you that we start about 30-35 points lower.
Most of the exit polls predict a huge margin or huge lead for NDA.
Reports indicate it's estimated at around $4.5 billion.
We have Nomura, which says that the second quarter was a beat across parameters. They maintain their non-consensus buy.
25,876. Nifty is flattish.
I've always maintained that it's easier to get a large IPO done than a small IPO done.
We have really reduced our dependence on domestic truck market.
News just breaking in, the Nifty Bank has hit a record high. The Nifty crossing its previous high of 58,577. The mid-cap index up another 200 today, so it's another record high for the mid-cap index as well.
We feel that today what we are endeavoring to go forward is to kind of really see that, irrespective of the demand conditions, we are able to make a mark in terms of going forward.
We are seeing fourth consecutive day of gains for the Nifty, very close to that 26,000 mark. The mid-caps are doing well, hit that record high level today, and Bank Nifty gave it some company too.
There's pressure because of international prices, export opportunities not existing.
Well, that is the day so far. Hello and welcome. You're with us on a fresh new edition of Closing Bell, last hour of trade coming up. We're coming to you from the CNBC-TV18 Motilal Oswal studios. Markets, by the way, had given up all gains of the morning and they'd gone into the red. Down small, 5 points, but that meant that we were about 120 points off the day's high. And this is almost on anticipated lines because, the sense was, as we were discussing in the morning, that you'd want to go in light, and that still remains the case because tomorrow morning is Bihar election results, and you'll start getting the first counts from 8 o'clock in the morning. And I think in the first 2.5 hours or so, things become pretty clear. So in that sense, if you're trading especially, you don't want to be heavy. And you just want to be a little lighter, and I think maybe that is something what is going on at this point in time. Lots of stuff. By the way, the market, remember, if you're thinking, well, does Bihar matter? It may not matter beyond if something untoward were to happen in terms of, not something what markets are not expecting. The Nifty has basically gone up about 450, 500 points very quickly in the recent few trading sessions. So you got these accumulated gains, 2%, right? That's all there is. But that is important and significant if you're trading, and that's the point that we were making earlier. Our colleagues are with us, Surubi and Rima in the studios. Guys, good afternoon.
Hi, good afternoon. It just seems like the markets have priced in an NDA victory, and the risk is that what if it doesn't happen?
Yeah.
Right? The outcome is unfavorable. And then that could result in volatility. And that's the reversal that you're seeing in the markets today. But this 26,100 has been a bit of a resistance for us, because even the last time around, that was the swing high from which we turned from there. And once again today, it's that 26,000 mark.
I guess some fear of heights, but I guess it's largely Bihar, as you guys have been saying, because otherwise global markets are fine. Nothing has really moved. There's no major event that can lead to this kind of profit taking. If you've not followed throughout the day, there's no fresh development on the trade deal with the US that becomes a reason or an excuse to sell. So it looks, by all stretch, that this is a little bit of Bihar at play and pricing in the possibility of something a little more mixed than what the exit polls had given out. Just very quickly, in terms of stocks, where the money is coming off, Eternal, ONGC, Adani Ports, there's Mahindra and Mahindra. Mahindra and Mahindra, by the way, announced a joint venture they're getting to life insurance today. We'll talk about that as we go forward. And some of the IT stocks are cooling off. IT has had a phenomenal run this week. Large cap IT names are up between 4%, 5% and 6% in some cases. So some of those gains are also coming off. So the IT index is, a little quiet. But then you have other winners, and enough of those. Asian Paints would be an example. 4% up, taking its total tally just in 2 days to 11 to 12%. It's been quite the mover. Hi, Nigel.
Well, that's right. Asian Paints, right out of nowhere, 15% higher. It seems to have, battled the worst of the difficult times. And that one, in fact, just take a look at it. 15% in this month itself. Out of nowhere, Asian Paints seems to be getting its mojo back. And the other one from the Nifty pack itself is Tata Steel. We'll tell you why it's dipped a little bit. But let's run our viewers through what's lined up on the show, guys.
Well, I think, yeah, Nigel, absolutely. So metal and pharma counters are seeing gains. PSU banks are seeing a down day. And of course, Biocon is the story we want to tell our viewers. So we'll focus on some of this stuff. And we'll play out the Biocon management sound bites in just a bit from now as well. Tata Steel, of course, Nigel will talk about more. He interviewed the management and some takeaways from that one. Stocks off the highs, so some perspective. And of course, as I said, Asian Paints, it's a beat. Again, you'll hear from Amit Singhal on the business and, of course, the way forward, whether this is the start of a turn, likes of Cohans, Endurance, Lemon Tree, Cochin Shipyard. These are all casualties and large volumes, by the way, on most of these. Cochin, by the way, is the #1 volume-led loser on the NSE right now. So a bit about all those as well. How should you position yourself in the last hour? Mitesh is with us with some perspective on that. Mitesh, what does one do?
Good afternoon. So I think, the market's kind of slightly tapered off from 26,000 levels, though I was looking at a target of 26,100. But as long as we are above this 25,800, 750 zones, I think declines close to that level should still be taken as a buying chance. And I think, very clearly, it's a market which, because now you have established 26,100 level as a supply pivot, I think, you would want to see if there's a pullback which can give an entry location, then the risk reward equation is slightly better. So in that sense, my idea is that 25,800, 780 is my buying zone with a stop just below 25,750 or 740. Having said that, right now I have one buy and one sell call. On the buying side is HDFC Life. If it drops by about 4 or 5 points, so 777, 778 is an entry point with a stop below 765 for a target of 800. And NBCC is a sell. Keep a stop at 112, look for targets of 104.
Okay. All right. Got that. Thanks very much, Mitesh, for the calls. We'll come back to you for some more ideas in a bit. But let's get you all the action from the political front, from the election arena in Bihar is, of course, the setting stage. Now, most of the exit polls have given an edge to the NDA. Access My India, that exit poll has predicted an NDA win with a narrower margin. Sud is here to explain to us, how some of the polls are stacking up and why perhaps Access My India stands out from the rest. Sudarshan?
So since the time voting has concluded in Bihar on Tuesday, we have been seeing only one thing, several exit polls. Majority of the exit polls have given the direction with a lead to NDA or say ruling alliance, that is of BJP and Janata Dal United. Now, what the formula has worked? The formula worked is MY, not the MY normally we associate with. This time, MY means Mahila and Youth. So youth, as per exit polls, has voted for RJD or opposition alliance, and Mahila, that is ladies, women voters, have voted in a huge number this time. It's the highest voting percentage that we have seen ever. It's more than 70%, and they have gone for incumbents, that is Nitish Kumar. Now, majority of the exit polls have given NDA edge with a huge margin. Today's Chanakya has given NDA as much as 160, and lowest for NDA is around 132, 133. For RJD or say Mahagathbandhan, lowest is 77. Now, in contrary, Access My India, which is one of the closest tracked agency as far as exit polls are concerned, it has given an edge to NDA, but margin is very narrow. Now, for NDA, the range is 121 to 141, so midpoint comes around 130. For Mahagathbandhan, it has given 98 to 118, so there midpoint comes around 110. Now, tomorrow is the real picture. In less than 24 hours, we'll get to know for sure if 20-year Banwas for RJD gets over or Nitish Kumar gets another term.
Okay, all right. Sudarshan, thank you very much for that indeed. I think that's the top factor on the market's mind and will probably be the case till we finally get the ultimate results tomorrow. Deven Choksi of DR Choksi FinServ is with us. Deven, thanks for joining in. So elections, of course, we'll just have to wait it out and see if it goes along expected lines or not. But let's start with earnings. And here, want to get your summary because the season is fairly mixed. Even today, you have the likes of a Honasa. We're seeing what's happening on Asian Paints. I mean, these are some of the top winners. And then, of course, you have a couple of, casualties. Lemon Tree would be an example. I'm just looking at where the rates are stacking up. Cohans, Cochin Shipyard. But when you look at, let's say, the consumer space, because that is where the highest expectation was, right? GST cuts will start showing up festive season. Within the consumer space, which are the one or two stocks where you think earnings are giving enough a reason to make a fresh buy?
Yeah, Survi, good afternoon. Well, since you mentioned Asian Paint, and I think it belongs to, the spending power in the hands of consumer. Certainly, I think I would like to look at this company from two aspects. On one side, I think this particular quarter, I think they had a good amount of volume growth as well, which was up till now missing in the company. Second aspect, of course, I think the benefit of lower crude oil prices and lower derivative prices of the crude oil, that is the input cost, which has also helped the company in producing better performance on the margin front. Now, given the kind of benign environment for the crude that we are expecting, I would like to think that the raw material cost pressure, which haunted this company in previous quarters, I would like to think that I think this particular situation is out of the way and could possibly be seen as a better performance or better performing company than what it was 4 to 6 quarters back from that perspective. Also, the surge of the competition, which actually I think created the panic in the market for the stock. I believe that the reality check is already in, and that's where probably I think they are seeing the higher amount of volume growth also getting reflected. So I feel that I think the higher amount of spending power in the hand of consumer certainly is a good omen, and I guess I think that's where probably we are likely to see many of the consumer companies continue to produce better performance going forward as well.
Okay, Asian Paints, that's the stock that Devin has gone with. Actually, we did catch up with the management today after what has been such a solid quarter that it's making the street sit up and take notice. And a lot of people are asking the question, is this, a bit of a re-rating moment of sorts? Hear out what the management had to say. Mangalam caught up with the company's MD and CEO, Amit Singhal, and asked him about growth prospects and, more importantly, competitive intensity, whether the worst of it is behind.
So overall, the endeavor and the focus is very clear that we would like to be in the zone closer to the double digit from a point of view of volume in terms of going forward. As we look at going in the further quarters, our endeavor is from a point of view of looking at fine-tuning our strategies, looking at working in the markets, driving the ROI of the retailers, looking at differential measures with respect to new products, newer strategies which we can bring in so that we can get the share of the business far more strongly. We are also targeting in terms of a huge slew of marketing efforts which kind of go in, and this marketing efforts are focusing with respect to regionalization a lot in terms of going forward. So we feel that today what we are endeavoring to go forward is to kind of really see that, irrespective of the demand conditions, we are able to make a mark in terms of going forward. So overall, when you look at the standalone business, the PBDIT margins are about 18.5. The console is standing at about 17.7 in terms of what we look. And both of these PBDIT margins have gone up quarter on quarter and the preceding quarter as well to that extent. So we feel that we are confident that we should be able to retain the range towards more 18 to 19 kind of a zone within the band of 18 to 20 in terms of going forward. What we feel is that the competitive intensity is still very, very high because of the fact that the overall demand conditions have been benign. They have not kind of given us any shoots or sparks in the market in a very big way. This is true across rural and urban centers to that extent. And therefore, every competitor existing as well as new, they are trying their bit in terms of maximizing the game in terms of what we're there. So we feel that the competitive intensity is going to remain to that extent.
Asian Paints, the standout performer over the last 2 days, and the other one has been Grow. Yesterday was day one, 31% up move. It's followed it out with another bout of momentum. At the day's high, Grow was up 17%. It's seen some profit booking, but it's still up close to about 7%. And right now, as we speak, its market capitalization is close to about 87,000 crore rupees. At the session highs, when it was at a price of 153, it got pretty close to that 1 lakh crore mark. Absolutely fantastic. Devin, come in and Grow. we believe in the capital market story in India, the long-term prospects. But at this price, 140, how does Groww look?
Yeah, so I think to me it appears expensive for sure. And I think for justifying the kind of market value that the company has registered, even post-listing, I believe that I think minimum 30 to 40% rate of growth will have to be continued for on a CAGR basis for next 5 years to justify the price that one is paying for this company at current market price. Right now the surge in the activity in the counter is also attributed largely to the adding of the stock into the portfolio by some of the funds. Because as we see it, I think many of the tech companies, consumer tech companies, including within that fintech space as well, or investech space in this case, I think there is a rush for most of the funds to add the weight into their portfolio. And that's where I think you are seeing some unrealistic price. But maybe the market over a period of time, I think, operates with the rational. And that's where some of the earlier consumer tech companies are now giving up. The investors are taking out money from those companies and putting into the newer ones to create the weight balancing into the portfolio. But beyond that, the numbers, corporate performance, will have to be extraordinarily fast, I think, if it has to be justified to this kind of valuation.
Okay, all right. Coming back to you, Deven, I wanted your view on Biocon because, the stock is surging actually after its management told CNBC-TV18 that the Biocon Biologics business will merge with Biocon. That could potentially unlock some value. First, let's listen out what the management had to say. Then we'll get Deven's view on the stock.
The board has constituted a special committee to look at various options. And one of the options which we had mentioned is a merger between Biocon and Biocon Biologics. And I think we right now focuses, of course, on strengthening the balance sheet by giving exit to all the structured equity or structured debt players. So we have already given an exit to Goldman Sachs and Kotak, and we announced that we have also entered into an agreement with Edelweiss to buy over the CCD and give an exit to Edelweiss very soon. So I think that portion of structured debt has been addressed. And I think as far as the bank debt on the bond is concerned, I think we still are very well placed. We have the debt repayment starting next year in a bullet form, and the bond, which is the large part of 1.2 billion, comes up for repayment in 2029. So I think as of now, the focus, of course, was on cleanup of the balance sheet, to look at corporate options, and then focus on generating cash flows to take care of the bank debt. We are hoping by end of this calendar year or before the calendar year.
All right, Deven, you heard what the management had to say. Folding the biologics business into the listed Biocon. They believe it's going to unlock value, and the street is buying into that. Stock is seeing good amount of follow-through buying. Your view on it?
Well, certainly, Nigel, I think a couple of things, of course, I think as management also alluded, saying the debt restructuring part is a more promising story at this point of time for Biocon as a whole. And of course, I think biologics, the biosimilar business, I think is getting into the main company under the merger scheme. Possibly, I think it's a good way to look at it because 90% of the top line is contributed in this case to the Biocon. So frankly, I think this part, I think is definitely making sense. As against creating one more arm, getting it listed, and probably, I think, allow all the three arms to remain a little weaker, I think this consolidation probably makes a lot of sense to me. Of course, I think the number impact will happen over a period of time. That is what I gather. But to me, I think at least rationally, it makes more sense to look at this company now.
Stay on, Deven. There's one more story that we were just flashing a while back, that Emirates NBD remains in the race to acquire IDBI Bank even after the RBL Bank deal that Emirates struck. Ritu now joins us with what she's learned from her sources. Ritu.
Thanks, Reema. Contrary to some of the reports recently, Emirates NBD, we've been given to understand, is not backing out of the IDBI Bank raise. In fact, sources have told us that the Dubai-based lender remains very much in the running, even after announcing that mega $3 billion deal to buy 60% stake in RBL Bank. We've been given to understand that Emirates NBD, continues to see IDBI Bank as a strong opportunity, especially given their scale, the government-linked businesses, and the LIC franchise, which it hopes to scale if and when it does, participate in that, process. So for now, remember, The government holds about 45.5% stake in IDBI Bank and LIC another 49%. Together, they're looking to sell a combined 60.7% stake in IDBI Bank. So now what all this means for foreign ownership in a bank, especially given, you already have Emirates NBD with a 60% stake in RBL in the works. Whether, how that pans out, how the government looks at the divestment process. The process itself, is still underway. Bids have not been invited. So it is still at a preliminary stage. But as we have reported earlier, there are some serious contenders that remain, in the fray. Those include, apart from Emirates NBD, Fairfax, Kotak Mahindra Bank, Oaktree. So we'll have to see how this progresses. For now, for Emirates NBD, which is looking to expand its footprint into India, this is very much on the table. And as and when the process gets finalized, we'll see what kind of offers come on the table.
Ritu, from the regulatory perspective, I mean, is there clarity on this? What do we know as of now? I mean, can a foreign entity own majority stakes or controlling stakes in more than one bank? I mean, is it allowed? I'm not sure if top of head, you'd have a view on that.
Well, as per current regulations, no, there cannot be two parallel businesses with conflicting interests that the same owner could have. So if at all, and this is hypothetical, if Emirates does win the race, it would have to look at merging the two businesses, so to speak, that is RBL Bank and IDBI Bank. But, that is very hypothetical. It's far out in the future. The process itself is not really kicked off with the bids not yet invited. These players have done the due diligence, and we've been given to understand Emirates is looking to expand its footprint here. So it is very much still in the race.
Yeah, absolutely. No, absolutely. And that's a really important caveat. That's a big hypothetical question. But I guess it's also maybe they really want to be in the Indian banking landscape. So maybe it's a either or. For whatever reason, if one doesn't work out, then maybe they can mark their presence via the other. Nigel, you have a point?
Just one point I want to make, Surbhi. With regard to Kotak Mahindra Bank, I recall seeing a Macquarie note that they said that if this happens, Kotak goes after IDBI Bank, then it won't be very, very good for them. So, as Ritu has broken this story, we're seeing a reaction on the stocks in focus. But also, Kotak Mahindra Bank actually has recovered from the low point of the day. As per analysts' estimates, they didn't want Kotak Mahindra Bank to go ahead with this. So I think a bit of a spike up is what you're saying. Just want to make that limited point, Surbhi.
Okay, all right. Thanks. That's an important point to remember. Thanks, Nigel, for that. And thank you, Ritu, for getting us the story. We'll, of course, keep an eye out on developments. Devian, before we let you go, Indian banking is a red-hot space, right? So many deals, whether it's the Japanese giants coming in, like the likes of Yes Bank, and then there is obviously Emirates NBD. So many deals, right? What is your sense on some of these tier 2 banks? And would you be buying in any of them? The ones that have managed to raise a lot of foreign capital, including, let's not forget, Mr. Vaidyanathan, IDFC First with Warburg Pincus.
Yeah, Survi, I think it's all about balance sheet game now, because as the country is growing with size, probably I think you require the large size banks to support this entire growth engine called mechanisms, under which I think whatever the transactions are required to be carried out. More than commercial banking, I would think that the lending books to the SME, I think, or MSME, I think is going to be probably requirement, I think, of the country. And that's where I think many of the stronger hands are getting into, like a Japanese bank coming into India, largely to facilitate more amount of Japanese investment also into the country. And similarly, some other banks coming from other parts of the world, including in Asia. I believe that I think this is going to be a natural thing. Maybe the size of these banks will have to grow. I really do not know at this point of time, I think, how much IDBI Bank would make a sense to somebody, unless I think a large part of the capital infusion takes place, along with, I think, the technology in infrastructure development taking place. Probably that could be the real game changer. But it's a long haul, as I see it, at least at this point of time. Whoever will be the parent eventually for this kind of thing. Government certainly trying to tweak the ownership policy for public sector banks. And I think that is where probably I think this move is expected, where I think some large size players getting into some of these banks who can possibly give the entry to some of the foreign players into the country.
Interesting points there, Devin. We'll leave it there. Appreciate you joining us for now. Just want to make a quick mention of Lemon Tree. Lemon Tree has had a, pretty poor last, I think almost 2 months now, right? So high in September was 180. Stocks at about 155. So I'm not sure what's going on here. And it's, by the way, the same levels where it was middle of 2024. Indian hotels, of course, is the other one, which also, I mean, has been now kind of languishing, but the damage, of course, is nowhere near what we've seen, both price and time correction on Lemon Tree. So here as well, the high was about, almost 900 rupees, talking about 700, was more recent in that sense. Lots of stuff moving around. Look at Prime Focus, for example, had a sharp move higher. There was a couple of HNIs who got into Prime Focus. It's back to about 169 rupee levels. It had gone to about 200 plus. Again, late September is when we saw that. Sequence Scientific is another one, 4.5% lower. Has undergone almost a change in ownership in that sense, the people who run it. Otherwise, bulk of it will address some of the earnings in a bit from now as well, which is Cochin and Cohans and Endurance, etc. Lemon Tree also reported numbers, but stock's been correcting even before from the highs. Okay, so we'll take a quick break at this point, and we'll come back. Sanjay Parekh is going to be running us through what he's making of the market. So coming up, stay tuned. Okay, well, markets, of course, are up about 20 points. They're off the highs by quite a bit, but they're not in the negative at least, which is the situation at about 220 or so. Sanjay Parekh is founder and CIO at Soham Asset Managers. Sanjay, great to have you with us here on the program as always. Thanks very much for joining us. Sanjay, so we'll talk what you're doing, etc. But I just want to start by asking you whether in the near term this Bihar election result tomorrow will make any difference. If it goes against expectations, if it goes as per expectation, then I guess we just move on. But what about the other side? And second, if you will, I was looking at your portfolio compared to last time. You seem to have reduced your financials exposure a little bit. Canara Bank used to be part of the portfolio. Sanjay, I don't see it anymore. Yeah.
No, actually, so the first thing, Prashant, I think the election, there is a very strong possibility of NDA coming back to power. That will be a continuity. But even if, just in case there's some disappointment, I think market will not give too much weight to that because ultimately, people do look. I mean, it is important, but not so relevant for markets, is what I think. So that's the first thing. The second is, of course, we own Canara Bank. I think we would have bought post the last month that you would have. So we do own Canara Bank. And we have, in fact, marginally increased our way to private banks. Yeah. But Canara Bank has been a recent entry. We recently entered because they've delivered quite well. And, in terms of growth, in terms of asset quality, in terms of ROA, it's around 1%. And overall, they manage cost well. So, and it's reasonable. These banks still are at one time, even if they move up a little bit to 1.1, which is possible. The SBI further re-rates from 1.25 to 1.35, 1.4, which is a possibility because they've also done well. Then, there is clear case for a big return on 27 and 28. And there's a sub-value for Canara Bank as well of 10 rupees. So,
my question was backwards, Sanjay. You've added it recently, not deleted it, because I had the fact sheet, but I think I had it backward. I think I was looking at the fact sheet 17th October, and I think so. It was ulta. But yeah, you've added Canada, right? But you're saying that you've increased private sector exposure a little bit.
Yeah, we've increased a little bit, all of them. Because I think in this run, I mean, they've consolidated for a while, but all of them, the Q2 results are behind there. Q3 also, there'll be a slow recovery. But I think next year for all these larger banks will be very good. Because by then, the interest rates would have bottomed, even if we have 25 basis cut. Loan growth, there is an economic recovery, which is strong possibility. Earnings also, I think, the downgrades we have seen Q3 should look up better. It will be a slow U-shape is what we feel. But economy overall should slowly recover, given all the central government measures and RBI support. So and the asset quality and the balance sheets are really fantastic. So next year should be a very good year for all the larger banks, for sure. And the asset quality is benign and the valuations are very reasonable. Even SBI, after such a big move, is 1.25 times FY27. Axis Bank is more like 1.45, 1.5. HDFC Bank, of course, is 2.2. And ICICI Bank is a little higher. But, if you get even earnings growth in some of these banks, they're fine. So they're good, safe bets from here.
All right. Hi, Sanjay. Good afternoon and good to see you win. One of the companies I think you're tracking quite closely, if I remember correctly, Samadra Motherson, you believe the prospects are very good from here on as well. We have the numbers that are flashing on the screen. You're fairly positive on that one, right?
Yeah, we are positive. So from near-term numbers will be weak. It could happen for one more quarter because, globally the situation, the overall environment for global car market it's stable, it's not growing. There are issues around tariff. So that is a near term. But a longer term, if you think from 3 to 5 years, this company is really, it's not only an auto ancillary play. There'll be an EMS play, which will be very large. There'll be an aerospace business, which is already they're doing. They already set up JV.
Yeah.
So I think this, in 3 to 4 years, we genuinely feel there could be a good appreciation.
Absolutely, Sanjay. So you're positive on this one. I wanted to compliment you actually on Vedanta, because you're one of the, funds that as percentage of your holding, it's pretty okay. I think it's 3-4% of the portfolio, and it's larger than what the benchmark as well has. And we have discussed this numerous times, Sanjay, in the last 1 year or so, and it appears that thesis is finally playing out. I think from 400 odd, we're talking about it. Even taking into account the dividends, the stock is more than a 550 rupee stock. So good call on Vedanta, and kudos to you as well as your conviction. My question to you is, do you believe there's still more to go on Vedanta? Point number one. Point number two is on Grasim. Now, there was plenty of excitement on Birla Opus that things are going to look up from here on. Now, suddenly we see the incumbents, they're getting their act together. Asian Paints has been one of the big gainers. Are you as confident now that Grasim still can, penetrate and do what it set out to do?
Yeah, so, Vedanta, of course, you all have covered very well all throughout. There's a dividend of 23 rupees after that you received, and now it's 530, so it's 553 technically. Zinc and aluminum is 90% of their contribution. And of course, silver also contributes. So all three put together is large part of the EBITDA. They've said they've done 20,000 crore in the first half. They said in the call they said we stick to the $6 billion. That means another 30,000 crore in the next half. That's very, very impressive, right? That's a 15,000 crore EBITDA per quarter. So that's a positive of, and then aluminum zinc prices we know, and then the entire plans of integration on the aluminum side is in place. Slowly and steadily, zinc also will expand, and even silver will in sync with that slowly expand. So, and the balance sheet is in good shape. What we did not like, and we conveyed them as well, is this JP deal where they actually no business to be there. Hopefully, sense prevails, and hopefully they back out in some form, or maybe Adani overbids. And it's absolutely not their core area. It's not destructive to the value, but it's just your complete focus moves out. And then one important thing is they've also gone on to record saying that the ICD that they had taken from Vedanta, the listed entity in India, they will repay with time, with time frame, that this is the time we'll repay that as well. So they're doing all the right things except JP deal, which I hope they back out. And if JP deal would not have been there, I think the stock could have been far more than Yeah.
Okay.
On the Grasim, just a bit, 1 minute on that. I think one of the resignations certainly, was a pain, but I think structurally they've got their act together. Asian Paints individually delivered quite well. I don't think it's a cost of Grasim Paints business. And hence they, of course, rightly, the market got positive because there was a surprise on volume growth on a lower base as well. And crude also helped them. But we really believe that Grasim is significantly undervalued. The listed company's value is 2.5 lakh crore. Even if you take a holding company discount, the paint value, the SOTP that we do, on 28, will not be surprised that there is a 25% upside from here on 28, maybe more.
Okay. All right. Sanjay, we'll have to wrap it up a little short on time, but we had a, in-depth view from you on Asian Paints and also Grasim. So thank you for that. We look forward to another call again soon and chat more. Thank you for joining in. Well, with that quick glance on the screen, and really nothing seems to be moving. It's so quiet. Mid-cap index is down about 0.3%. Remember, the mid-cap index actually hit a fresh all-time high today. And from there, the profit-taking pretty much set in. How's it looking on the F&O side, Nigel?
Well, there are some lightening of positions and there are some shorts actually that are coming into the system as well. If you look at the Nifty itself, the Nifty has now moved into the red. But even when the Nifty was up 30-40 points, actually the futures is already in the red, telling you there's a good amount of shorts that are getting into the system out here. And some longs as well, they're unwinding positions, getting out of the market ahead of a reasonably big event. The Nifty Bank as well, there is some lightening of positions on the future side out there. Now today, if you're on the put or even the call side, and if you're writing, you're making money. Because the Nifty is more or less flattish. Even when it was in the green, you were not making money on the call side. the 26,000 call, the premium out there was relatively low, even when the Nifty was up close to around 50 rupees. Now, in fact, it's dipped further into the red. And the 25,900 put as well, good amount of open interest built up out there. And the premium is more or less flattish, or actually is in the red. So it's a day for writers getting into a big event. The markets are working with a bit of range, 450-point range just in the near term, going by the kind of writing that we have seen. Individual stocks that are in focus, Ashok Leyland, that's bounced up very, very well. It's still holding towards the high point of the day, and the open interest is lower. Stock up, open interest down, telling you there's a short covering bounce playing out there. Page Industries came out with a set of numbers, but from the word go itself, we had a good amount of open interest built up. And now the stock has taken a bit of a leg down, and open interest has spiked up. There are some shorts in the system. Normally, not a very, very active counter, but that one is seeing some kind of shorting. PG Electroplast, good amount of bounce is what we're seeing out here. Ahead of its numbers, there's fresh buying being seen on that counter. And finally, Vedanta, the stock that we're just discussing, well, that is seeing a good amount of open interest build up. In fact, it's one of the relative outperformers from the metal basket itself. It seems the street now is coming to terms that the demerger actually will get a go-ahead, and that's why the stock is up. Some delivery-based buying is what you're seeing, and also some fresh open interest built up. Back to you.
Okay, all right. So that's the F&O picture for the time being. Let's take a very quick break. We'll come back on the other side. We'll have Nimesh joining in with all the D Street chatter. He's been at the UBS conference. We'll find out what he's picked up. And then, of course, some final trading ideas coming up with Mitesh as well. Welcome back. It's time for D Street chatter. And as promised, today Nimesh is joining us from the sidelines of the UBS conference, which is underway. It's day 2. How's the mood like, Nimesh?
Hi, Sarvi. Mood-wise, I'll tell you, I met a lot of investors at the conference as well. I guess, the single soaring point has been that India has been underperforming for the last many months. And I guess that's largely because of the Indo-US deal. Now, if that gets taken out, maybe you'll see a big short covering rally and a rally as well. So that's a hope, I guess, which is building around the entire Indo-US deal. So that's something to watch out for. But I guess today, if you look at the markets, sharply off the day's high, Nifty has almost given up 100 points from the day's high. So looks like there is a bit of nervousness before the big event tomorrow. That is the Bihar election outcome. I guess once that is out of the way, you might see a bit of a pullback as well. From a flow perspective, again, it's a mixed of trade. I've been saying for the last few days that while the day has been buying, the FI selling is not yet tapered off, so to speak. That's the case today as well. Within sectors, the private banks is where there is a lot of interest, which is still on. Classic example is IndusInd Bank, that's up 10% in last 3 days. We're seeing buy flows into Bandhan Bank as well, in today's trade, especially in ICICI Bank as well. So private bank is where I guess there is buying interest still from large institutions from a flow perspective. As I said, the big trigger to watch would be as and when the Indo-US deal happens. That will be a big trigger to watch out for in the very near term. But from a today's point of view, I guess there's a bit of nervousness before the big election outcome tomorrow.
Okay, absolutely. Let's see. That's the one hurdle that the market needs to kind of get over. What about all the other chatter, individual stocks? Any other buzz that you picked up today?
Well, so the first stock on my list is Nippon India. We normally don't talk about this stock, but it's been buzzing in trade today up as well, the decent volumes as well. And I believe the street is anticipating some corporate development in Nippon India very soon. So that's the first stock in my list. The second stock is Indraprastha Medical. Again, well, the stock has been consolidating in a narrow range of late. Even for Indraprastha Medical, there is a strong buzz of a corporate development happening there as well. A potential open offer is what the indication is as far as Indraprastha Medical is concerned. So that's the second name. The third stock is Delivery. We've seen a bit of a sharp reaction on the downside post the earnings, largely on back of selling pressure as well. It looks like the selling seems to be largely over, is what I understand from a leading FI. So that's something to watch. Maybe you'll see a big delivery volumes in today's market. And the last one, there is Delivery is one stock which I spoke about. So these are the few names one should watch out for. I guess Indraprastha Medical could be quite interesting in the next few weeks to watch out for.
Okay, all right, got that. Thanks for all the chatter and the buzz, Nimesh. Let's quickly move on now. We've actually got Nigel now to take us through all that has worked for Tata Steel. He also had a conversation with the management today.
Yeah.
And the numbers and the overall performance is good. Nigel, what else did you pick up?
Well, that's it. So we made it back from the F&O desk back for the Tata Steel, update. So Tata Steel, actually, the numbers were good. The consolidated EBITDA number was good. The margins more or less in line. The India business did quite well. The EBITDA per ton was better than what the street was working with. And in terms of the European business, it was more or less in line. The debt as well went up marginally, but net, those numbers look good. But your question will be, but then why is the stock not running away? Let me highlight a few points post my interaction with Mr. Narendra here on CNBC-TV18. First, on steel prices. He said that they're not moving up because of lower avenues to export, because the export markets are flooded, and also the domestic production for all companies is ramping up. So that's why, in fact, steel prices are not moving up. Next, he said, in Q3, coking coal costs actually will dip by close to around $5 to $7 per ton for Netherlands. So good for them. But for the India operations, actually the coking coal cost will go up by around $5 to around $7 per ton or thereabouts. So that's why, in fact, the cost will go higher for Indian operations. Then he said on steel prices, actually they'll dip by close to around 30 euros per ton in Netherlands. And in India, it will be down by close to around 1,500 rupees per ton in Q3. So for India, actually the margins will see some kind of compression because of the lower steel prices and the higher coking coal cost. Even in Netherlands, we'll see some kind of a pullback. In UK, though, the margins will be more or less stable out there. With regard to, when I asked him about UK moving into the green, he said it'll continue to remote losses, even for the next couple of quarters, because things are still under pressure out there. He says that maybe in the first half of next fiscal, probably it could move into the black, but it will require some government support, like what we have seen in other parts of Europe. They're hoping that in UK as well, there's some support that comes in there. Cut down of the quotas and put in some import duty. That's what could help to turn around the UK business. But let's focus on Q2 earnings then. They have been impacted by several stocks. Vinny is here to run us through some of those details. Vinny?
Hi, yes, so a lot of these companies that are impacted on the negative side today. Firstly, is Cochin Shipyard, weak set of numbers, miss on all counts for the company. Profitability also seeing a sharp decline of around 48%. Mainly this impact was due to subcontracting charges, which have seen a very sharp increase coming in. So 49% increase in subcontracting charges as well as provisions. So overall, a weak set of numbers because of all these factors. Cohance Life Science, that's another one that's seen an impact coming in today. Revenues down 8% today. I mean, in Q2 FY26, margins of the company at 21.8% versus 34%. And obviously, the revenue decline mainly was deferred shipments of the CDMOs and FDF sites. Some of the key molecules, there was destocking on that front. So those were some of the impact that came in for the revenue front as well. And overall, a weak performance there. Endurance Tech's another company that reported a weak set of numbers this time. Mainly the reason why revenue was seeing a growth, is seeing a growth in terms of EBITDA. Margins have seen a contraction and there's pressure coming in on the margins, which is leading to a decline in today's trading session for the stock as well. Overall, for Indian OEMs, two-wheeler sales volume were up by 10.3%. But because certain concerns and some of the clients of theirs, which are big players, are not doing well, that is something that has impacted the company. Lastly, Lemon Tree also weak set of numbers coming in from them. 7% growth in terms of revenue. Margins, EBITDA actually has remained flattish and margins at 42.7% versus 46%. So a sharp contraction there, which kept pressure on the stock today.
Thank you very much for that. And Eicher Motors numbers are also flashing for you on your screen. It looks to be in line, at least at the margin front. The top line for the company has gone up by 45%. And this is versus actually bang in line with estimates. The CNBC-TV18 poll was for a 44% increase in top line. That's played out. Margins at 24.5%. Again, largely in line. A bit of a moderation compared to same time last year. A drop of 100 basis points at the margin level. Net profits, though, have fallen short of estimates. 1,369, so missing our estimates by about 70-80 basis points. Mitesh is back with us for a few BTST calls. Mitesh, still struggling below 25,900, and mid-cap index is down.
That's right. I think, the market action doesn't give you a lot of confidence to carry extraordinarily long positions. So I would, suggest adding some positions on the short side stocks which are looking weak. So Policy Bazaar is a STBT with a stop at 1745 for targets of around 17, 10, 15. Similarly, REC also, some STBT positions can be taken with a stop at about 362 for a target of 353, 354.
At the index level, will you go short or you don't have the conviction?
No, I don't think there's any kind of breakdown happening on the index side. But broadly, a repeated failure to sustain about 26,000 and 26,100 pivots means that we might just chop around unless there's something very, very positive which has not been discounted in the numbers tomorrow.
Got that. So after 3 days of gains, today is a bit of a session of pause. Markets have come off about 120, 130 points from the day's high. Moving on now to an exclusive. We understand from sources that a second round of talks is all set to take place between hospitals and insurers, and they're likely to put forth their demand of capping treatment rates next year. Yash joins in with the details.
Well, that is exactly what is happening, what we've been given to understand from our sources, that after the first round of discussions which happened between hospitals and insurance companies, where, according to our sources, certain hospitals came on board with respect to not taking any increase in rates for 2026. A second round of that discussion with certain hospitals is expected to happen today. Now, of course, insurers are expected to put the demand of these hospitals not taking any treatment rate increase for the year 2026. And as I said, certain hospitals, large hospitals, had already come on board with that particular decision of not taking rate increase for 2026. But for the balance hospitals, the discussions are likely to happen between insurance companies and the representatives from the hospital today. Apart from rates, of course, what are the other demands which insurers are likely to put? The first one is common empanelment when it comes to all the hospitals and standardization of treatment rates amongst these large hospitals. These are the two other demands which insurers will put forth in front of hospital in today's meeting.
Thank you very much for that. Ambrish Balika is also joining in for the last leg on the show. Ambrish, before we get to the earnings reaction, let's talk about Atul Limited. Came out with the numbers about a month back. It's a story that you like. Tell us why.
Atul is an integrated and diversified chemical company. I mean, they have about 900 products across chemistries. Customer segments is across crop protection, pharma, polymers, aromatics, dyes and textile chemicals. And competition also is reducing since no new major player is getting into these segments. Strong growth in the last 15 years. I mean, we have seen a revenue CAGR of about 10%, EBITDA and PAT have multiplied 10 times. Margins have doubled to about 17%. Last 3 to 4 years, there's been a huge capex spent and benefits should start coming now. Management also expects about a 8,000 crore top line in FY28 against about 5,600 crores in FY25. And Q2 earnings were also more or less in line. The stock has consolidated. So I'm expecting an EPS of about 260 in FY27. And with that, my target price is about 7,800.
Thank you. Samvardhan Motherson has been the big mover in the last 10 minutes. Stock has surged close to about 4% after numbers came in ahead of street expectations. Company's top line beats expectations by close to about 200-300 crore at 30,200. Net profits too higher by 70-80 crore. Get into a break. More on the markets when we return.
Welcome back. We're in the last leg, just a couple of minutes to go before the day winds up. Ambarish, I just wanted to get your thoughts on the CV players. Ashok Leyland, of course, the stock's done well today after numbers up 5%. The management commentary was also fairly promising. We spoke with them in the morning. And now Tata Motors, it's offering you a pure play CV entity. I mean, you don't have to play a jumbled auto stock anymore, right?
Absolutely.
So give us your thoughts on both.
In fact, I mean, we have seen extremely good performance from the passenger vehicle, companies. But I mean, from here on going ahead, at least the next 3 to 4 quarters, I see the CV companies playing out decently well. And from there, I mean, earlier, like you rightly said, one had to buy Tata Motors, then you get both PV and CV. But now with both of them listed separately, I think it's clearly a time to look at the Tata Motors CV segment and buy that at the current levels. Even Ashok Leyland, I mean, even after the sort of a move which we have seen, I think there's still a decent upside left. I think from here, we should see at least another 15 to 18% upside over the next 9 to 12 months.
Okay. That's the CV side. And very quickly, Amrish, before we let you go, I have to talk to you about the IPO of the week, right? Grow is still growing.
Right.
And what a warm reception the market has given, just because the valuations were, they left something on the table. But now at current prices, what would your advice be?
See, I mean, I believe that the IPO wasn't that cheap. I mean, IPO was expensive, but and again, the listing also wasn't expected to be too great. So it was a major surprise, and I think it was a very positive surprise the way it has listed. Because if Grow also had listed like Lenskart and possibly had gone down, then I think the IPO market, at least for the time being, would have been off for a while, and we wouldn't have seen any sort of subscriptions. For the IPOs going ahead, at least for a while. But I think IPO, at least Grow has at least again reignited that interest in IPOs, possibly. The way it has given returns of nearly 40% in such a short time. But at these levels, I surely will not suggest buying. I mean, those who are lucky to get allotment, I think it's time to book at least some profits at these levels. Because if you compare with the other listed players, it is quite expensive.
Today, PhysicsWallah closes for subscription, and tomorrow is Pine Labs 2080 crore listing. They raised about 2,080 crore. Overall subscription was about 2.5 times, and listing is tomorrow. Well, it's an absolutely flat close on the Nifty and the sensex. The Nifty ending below 25,900. So taking a break after 3 days of gains. The Nifty high today was about 26,010. So from the day's high, we've lost about 120, 130 points. Mid-cap index ends with a cut of about 0.3%. The mid-cap index, lower. The advanced decline ratio also slightly under pressure. Sectorally, I think it's IT which took a bit of a backseat today. So IT seeing profit booking, PSU banks, defense too. The Nifty Defense Index down nearly about 1%. CPSE, FMCG were a couple of the other drags today. And the auto index also ending mildly lower.
Yeah, absolutely. So it's been a very, very stock-specific sort of a day. If you talk about the mid-caps, then let's first look at the losers, because mid-cap index is ending with a cut of about 0.4%. Lenskart, 5% lower. Cochin Shipyard, earnings that haven't gone down too well with the market, 5% lower. Endurance, Cohance, these are stocks that have seen a big knock, 7 to 9% off from some of them. Lemon Tree, another result disappointment. However, on the upside, the stock that we were just discussing, Grow, has had a decent session, 4% higher. Ashok Leyland, 5%. Samvardhana Motherson had a late surge and a big one coming in at that, almost 5 to 5.5% on this one as well. PG Electroplast and Data Patterns were some of the other winners of the day. So a very quiet session draws to a close. Market giving off a lot of the recent gains. The Nifty's rallied 700 points almost in the last 5-6 trading sessions. Some of that came off today as we get set for the Bihar verdict tomorrow. Well, on that note, the team of Closing Bell will take your leave, but do keep it with us because we have Markets Forward coming up next with all the action.